What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
Gentlemen, what a week it's been. A lot going on in the markets. I'm not going to lie, I'm a little bit tired. Took a trip up to New York to check out what's going on at Pub Key. We had a great mining meetup last night. I'm excited to end the week of recording with this discussion. We're joined by the executive managing director, of Bespoke Group, Matt McClintock. Matt, thank you for joining us today.
Yeah, absolutely. Thanks a lot. Thanks for having me.
I'm really excited to dive into what you're doing at Bespoke Group. I think it's actually this will be a great follow-up conversation to the episode recorded this week with Morgan Richard. But before we jump into that, like I said, there's been a lot going on in the macroeconomic landscape this week. And so I'll rattle off a few of the headlines that are top of mind for me, and then I'll just throw it to the board here to begin discussing them. So last Friday, we had the Bank of Japan make a questionable policy move, sort of changing their strategy when it comes to yield curve control. That sent the JGB markets into a bit of hysteria, and the yen was pumping against the dollar. We had Fitch come out earlier this week and downgrade the U.S.'s credit rating from AAA to AA plus. At the same time, the Treasury, unfortunately for them, came and announced that they're planning on issuing $1.85 trillion worth of debt throughout the rest of this year. And at the same time, we have interest payments on the debt that we've accrued here in the U.S. approaching $1 trillion, and WTI crude ripping above $80. I think it was sitting around $83 today, the last time I checked. So all those headlines in mind with a narrative that has really been getting stronger and stronger in the mainstream, which is that it seems like the Fed is going to be able to execute a soft landing here. With all those headlines in mind, what do you guys think about the probability of a soft landing materializing on the back end of these interest rate hikes that the Fed's been on?
Really, really low in my book. It's kind of, it's a little frustrating to Marty, I'm sure you experienced this, where you write about something, you're trying to draw attention to it week after week, month after month, and then a year later it starts to play out, and everybody's surprised by it, and you're like, well, I've been trying to talk about how this is going to happen, and this is kind of the position that I've been in this week of like, the math on the national debt and where it all points to has been my North Star in terms of why the US dollar is going to continue to erode at an accelerating rate, and why Bitcoin makes a ton of sense, more sense than ever in this current economic climate and future outlook. And it's happening now. You can't go from zero interest rates from the Fed for a decade and then suddenly jack up interest rates to 5+%, knowing that the national debt will have to roll over what interest rates apply to the national debt, such that your $30+ trillion of national debt eventually roll over to a 5% interest rate, which means $1.5 trillion of interest expense when you're already running $2 trillion of annual deficit, and that's been normalized over the last 20 years. You can't have that happen and it not point to the bond market falling apart and the continuing erosion of the US dollar. It's just finally happening and arriving in the mainstream.
Yeah, I think. Go ahead, Michael.
I just anchor, there's these different takes. We fall on different sides of the curve where Jesse gets in the math. I just think back to Parker's just too much debt, not enough dollars. It's been like this and they have to continue to print. Everything's bound to break because you have to continue to deploy more and more dollars into the system, hence inflation. And it's just a matter of time between these little like cracks starting to show up and fissure. And then we consistently see it every 3, 6, 9, 12 months. Shit breaks and everybody's like, what happened? And it's like, we've been saying it the whole time.
And Japan is looking to our future too. Like Japan is just a little further along in this late stage fiat process. They've had to embark on yield curve control. They approached it in a terrible way because they drew a line. They drew a line so low that on their interest rate graph, and then the Fed has like quickly raise rates way beyond that. So now when you draw a line, you're beholden to defending that line and not allowing the free market to play out, which is a terrible position to be in. And we're seeing that breaking with the yen being the release valve for it all. So, if you want to know what's going to happen to all fiat currencies eventually, just look at what has been the trajectory of Japan over the last 10 years, and then imagine that on a kind of compressed timeline. And maybe some countries, they collapse way faster. The US, maybe it's the same rate. But yeah, that's the next decade for us.
I mean, I think Japan provides some lessons, but I think there's some key differences. I mean, the US is, much more important on the global scale. It's a much larger economy. But one certain case in point is just the aging population in the US. I don't know. I think that in some cases, I tend to agree, Marty, that a soft landing is impossible. On the other hand, I would not underestimate Washington's ability to financial engineer something that just continues to kick the can down the road. I don't think that argues against Bitcoin as the pristine store of value because it allows people to save wealth and kind of build up value in non-US dollar denominated terms. But, I kind of ascribe to this theory that, all fiat currencies are broken and corrupt at their core. It's just that I think the US is probably the strongest of a terrible system. And I think we're going to see other economies fall on much harder terms before the US follows suit. I think that one of the things that's been really interesting to see is the BRICS nations really starting to denominate trade agreements outside of the US dollar. So I wonder if we're starting to see a faster erosion of the US dollar system, the euro dollar system, which can then begin to undermine the US dollar as a global reserve currency.
Yep, absolutely. Big part of it. You reminded me of Greg Foss likes to say that the US dollar looks like the best looking horse at the glue factory. To say ultimately it's not going to matter too much, but for now it's in the best shape.
Well, it's great to have options.
Yeah. And I listened to a podcast, the Galaxy Brains podcast that Alex Thorne hosts from Galaxy Digital. And one of his recent guests works for one of the chain analytics companies, but he was telling an anecdote about the shipping vessels that sit off the coast of South America, different countries, Ecuador being one of them. And they fish the land and then they smuggle goods into the country too. But he was saying that via their analytics, they were able to find that they're actually sort of doing what the U.S. did in the 70s after we went off the gold standard, began flooding markets with dollars for goods across the world. He said they're seeing that with the digital yuan in places like Ecuador, where there's communities in Ecuador beginning to transact with the digital yuan as the Chinese are sort of integrating it into their economy via these fishing vessels, which I thought was very interesting and is, again, like sort of Triffin's dilemma playing out, but instead of the dollar flooding international markets with dollars. It seems like the Chinese, in some form or another, maybe on a very small scale at this particular point in time, are doing that with the yuan, which would play into that thesis you just described, Matt, where it seems like the dollar's dominance is waning. And then on top of that too, like going back to like all these headlines and the soft landing, I agree. I think the Fed will find a way to create these facilities and kick the can down the road. But in terms of like having egg on their face, I think the signal here is with everything going on in the bond markets, and then you have WTI screaming at the same time, which with CPI from June being at 3.3%, we'll find out what it was in July, a week or two. But when we get the August number next month, I think it's going to be surprising, especially if WTI stays elevated, even rises more, and then the situation in the bond markets continues to deteriorate, and then the Fed's forced to pause in September. Remember, they don't have a meeting this month, so I think we could find ourselves in a scenario where, especially if oil rips, like it becomes pretty obvious that inflation hasn't been tamed and actually materializes in CPI, and that's just like big egg on the face for Jerome Powell. And I guess that's the big question at that point. Does the psyche of people using the dollar begin to change? Like, holy crap, they just did all those interest rate hikes and they actually didn't tame inflation as well as they were saying they did.
Yeah, it is very notable that you talked about a few things there, Marty. Like, price of oil's up. Gold is reacting positively to this this week. That means that people are fleeing from bonds. Bill Ackman is betting that yields are going to go to 5.5% for 30-year U.S. Treasuries. Billionaire, big personality, and that's a big bet. And I wrote about this recently. The bondholders burning platform. The math just doesn't add up. Bill Ackman's bet is more medium-term based. He thinks that inflation is going to be sticky, and it's here to stay, basically. And then I come back to the 70s and the 30s and 40s. We had 3 waves of inflation. Did we just go through one up and down, and we're finding some sort of base here before the next structural set of inflation comes? Specifically because with interest rates going up so fast, over the last 18 months, the bodies are going to start showing up more and more now. The banking crisis, I think, is not over. It's kind of more on pause. The bodies start to show up. The Fed has to print to stimulate us out of this. And then you get that situation where the Matt's talking about of it looks like a soft landing because they print so much. They print so much that markets start to go up again quickly in order to try to paper over the real harm that has been caused to the actual economy in terms of businesses going bankrupt and job losses starting to materialize more. So you print a bunch to make it look like everything's fine, but that triggers inflation. So they've painted themselves into a corner, and it's just a matter of time until the shoe drops. But when the shoe drops, it won't look like it's dropping because they'll print so much money it'll look like it's floating in midair. Like I think that's how this manifests in reality. But when you're messing with the measuring stick, when you're messing with what a dollar is, because you're printing so much of it, there's no way around it. Like that is an era of economic destruction if you're using that as your unit of account, if you're holding that asset. And that means if you're holding actual dollars or if you're holding bonds, which are promises of future dollars. And in that context, gold, hard assets, gold, land, Bitcoin do well.
It's a it's interesting because we talked about this with Dylan about the different CPI metrics and all these different ways to measure. And we talked about like the coast and the news, and there's things that are happening on CNN versus what's happening in the real world. And I think about it in the same example of Jesse, you referenced the bodies, and it's like, we know the bodies are everywhere. If you look, they're like just like sitting there. There was and not to you, but just in general, like all the signs are there on a macro and micro scale. There was a recent, if you guys remember, 21, I think it was late 20, but 21 during COVID, there was a company called Hopin that was like software like we're on right now, web, video for, basically to take what happened in physical world when it came to conferences and put online. It was a multi-billion-dollar firm. I think at the highest point, they raised at close to $7 billion on the valuation side. They raised over $1 billion in venture capital. And they just sold like the past week for $200 million to Ring Central. And they took the capital and they, kind of dispersed it to the venture, pennies on the dollar. I think the CEO, he made out like a bandit. He sold on secondaries. But the point in all that is like, there's a big body there when you think about the amount of dollars destroyed, the trust from an LP to the venture side, the valuation that was at that time. People took those dollars and went and bought cars and all the things from an employee standpoint. Those people are out of jobs now. That inflation's running, that amount of capital chasing fixed goods, whether it's oil, cars, whatever, Bitcoin. But that's just like one example that's all over the place. And you reference, Jesse, gold, Bitcoin, and land, and it's fascinating because as you talk about bonds, we talk about venture, all these different asset classes that people are traditionally like put, whether they're their mutual fund or if they're a very high net worth individual that's going into private equity via venture or other assets. It's like, where do you park it if you know all of these things? If you know that like there's bodies continue to pile up, but you don't know where the actual trade is, and you see this also like Russia seizing $300 billion in treasuries. It all just like points to these things that are foundational, and gold and land have been that for thousands of years, and it's easy. And it's like, if you put the time in, you start to recognize Bitcoin's right up there. And it's kind of crazy to think about, right? Because it's like a 13-year-old asset. But it's like, where else would we feel good? Just personally, people on this call, outside of the three things we mentioned, maybe a few others that you can touch, feel, grab, move at a moment. I mean, I guess you can't move the land, but you have other assurances around it. It's just a fascinating situation to be in, because everybody would think that that's insane. But the reality is there is only so many things that I think anybody on this call will feel comfortable in parking, their wealth in.
Well, I think that's a critical point, because it's a matter of where do you store value versus what do you use it as a medium of exchange. I know a lot of times we talk about this in the broader context of Bitcoin. But I mean, there's so many things that, Jesse, you kind of particularly zeroed in on that I think are worth kind of digging in on a little bit, because I was kind of making some notes on this. I mean, look, we're looking at the largest generational transfer of wealth in the history of the world, and it's underway right now as the enormous baby boom population begins to die, transition their wealth to younger people. Sometimes they're old folks like Gen Xers like me, but then more than likely it's Gen Z and millennials that are on the receiving end of this. There is a natural tendency for younger adults, kind of what I would call the inheriting class now, to be interested in 21st century assets. They're already used to a global world. They're already used to a digital world. A digital store of value is much more logical for a lot of the inheriting class than a lump of gold, a brokerage account, a piece of real estate that nobody's ever visited in a long time. So there's already this shift underway. Another thing I kind of wanted to zero in on a little bit is, again, things are just different now, which undermines, I think, the likelihood of a true soft landing. I mean, I believe that, like the historian Neil Ferguson wrote a book called Colossus years ago, and it's basically documenting the death of an empire. And you don't have to be a genius to figure out he's basically talking about the American empire coming to an end. And this book was years ago. But look at it. We've got the gerontocracy class that occupies all the seats of power, and from the White House through both seats of Congress, through a lot of the legislatures across the country. We're, generally speaking, we're ruled by a bunch of septuagenarians and octogenarians. And not only is it a gerontocracy, like our friend Nick Carter talks about. It's also what I refer to, what the better word for, I think, is kakistocracy. And if you look that up, a kakistocracy is ruling by the least fit and most incompetent class within a society. I think that's kind of where we are. And if you look at it, you look at where the innovation in regulations are taking place, the innovation in legislation is taking place. It's not here. It's not the United States. It's in places like Switzerland. It's in places like Singapore. It's in places like Dubai. And what do we see as a result? Well, naturally, we're seeing outflows of capital and outflows of talent. And that is a sign of a dying republic. So unless and until we get a significant change in leadership, really kind of across the board throughout this country, I think the United States is going to be entering an era where we're trailing economically, from a policy perspective, and from a talent perspective. And I think all of that stuff argues against the idea of a long-term bullish outlook on American hegemony. Back in the 70s and even in the 80s, we had the undisputed most powerful military in the world, and we had the undisputed global reserve currency. But now we see that as being eroded farther and farther as time progresses. And now we sit here, in the first third of the 21st century, and there are significant fissures in the foundation on which American power is built. And so I'm afraid that if we don't find a way to provide some freedom and flexibility in how Bitcoin, digital assets, other innovation is built, going to something that more represents a sound monetary policy than just this print our way out of any disaster we can think of, then I'm afraid that we're beginning to see the long-term decline of a republic.
Yeah, absolutely. I always think about the intransigent minority concept of, I'm with you. I think that the only way that we can save the republic from the inevitable decline that comes from having been the world reserve currency, I think about what has happened to the UK over the last 100 years. They were the world reserve currency going into World War II, and then that was kind of their last gasp of dominance. World War I really, and fading away. And since then, it's been kind of a story of slow erosion of their global standing. And that's our fate too, unless we can hitch our wagon to something that has eternal staying power economically and can't be eroded in the way that a national currency can be eroded because of taking on too much debt by printing, U.S. treasuries. And so Bitcoin becomes this existential hope, this hope for the American endeavor that we can ride this thing by just waking up enough people to the economic reality of what's going on and what drives Bitcoin to higher and higher over time. And so if you can get to that tipping point of the intransigent minority, which is a tiny portion of the population, but a loud and vocal portion of the population believing in something, such that they can influence policy of the whole. And that's something like 10 million US Bitcoiners. So, 1/30 of the population holding Bitcoin, believing in it, understanding it, and seeing it as a way to build a brighter future for America. How far away are we from that? That's within a decade's reach, I think. And if we can get there, we can hopefully shape policy enough to do what RFK is floating. RFK Jr. is floating this ridiculous idea of, what if we back a small percentage of our national debt with hard assets like Bitcoin? And it's a ridiculous idea right now, but that Overton window shifts. And, this is a fringe political character saying it right now, but there's substance to it. And if we as Bitcoiners loudly encourage this kind of conversation, that fringe idea can increasingly become a mainstream idea as politicians receive positive feedback for talking about it. and hopefully we can, converge on having enough American Bitcoiners loudly advocating for Bitcoin, and politicians seeing this receptive audience, this energized audience, and catering to them, such that we can find some way to shore up America's fiscal position by incorporating Bitcoin into our financial landscape in a more deep way. That's the way where that's the path forward, where the U.S. doesn't fade into obsolescence and instead retains its power on the global stage.
Yeah, I think piggybacking on that, this is why we brought Matt on the show this week, because I think what you and your team at Bespoke are doing to sort of empower that intransient minority that's getting larger is extremely important. I think the discussion that myself, Michael, and you had earlier this week was extremely illuminating to me, because I think your approach and your perspective on how seriously Bitcoiners should be taking their holdings and protecting it over time is going to be imperative to have successful intransient minority in the long run. So I think this is a good jumping off point to talk a little bit about your history, Matt, why you started Bespoke, and how you guys are sort of integrating yourself into the world of Bitcoin.
Yeah, I mean, I think this is stuff that we're seeing all the time. So just as maybe a quick background, I'm a practicing attorney. My focus in my career has entirely been around wealth transfer structures. So kind of broadly under the umbrella of estate planning, but with an eye not just towards what happens to my stuff when I die, but how do I then pass my wealth on? Well, I guess first of all, how do I structure it in tax efficient ways that are private, that are protected from potential creditors that may seek to separate me from this wealth that I've built? And when I do pass away, how do I pass on my wealth, however modest or vast it might be? How do I pass that on to the people I care about in ways that set them up to become the best versions of themselves, so that whatever I saved for, however many sats I stacked or whatever during my lifetime, now it's time to give that to somebody else. How do I make sure that I give it to them in a way that is tax efficient, that protects them from bad decisions and maybe, self-destruction often? How do I help them not be vulnerable to have that wealth taken away from them involuntarily from somebody else? And so that's been the essence of my career. In 2017, well, I guess, because I've been doing this for a long time, I've got a very broad focus in that world. The vast majority of my clients are highly affluent, so we're doing a lot of tax mitigation planning, whether it's capital gains tax or gift and estate tax planning. But it's also kind of multi-jurisdictional in scope. So we're based in Evergreen, Colorado, but we've got clients literally all over the country. We've got a handful of clients around the world. And so in 2017, I got introduced to a client, a prospect, I guess, at the time, who had about $150 million worth of Bitcoin. So kind of OG quality type of person. And as you might imagine, they're dealing with a significant amount of wealth. They're dealing with massive estate tax liability if they were to die. And even beyond that, they're dealing with the complexity of managing an asset like Bitcoin that's a heavily concentrated position in their estate that is complicated for somebody to inherit in a way that they understand what it is and how to do it and what to do with it. And so that kind of exposed me to the edge of the rabbit hole, if you will, because at the time, Bitcoin was nowhere on my radar. But then I had this epiphany as I was talking with this person who would become a client. I had this epiphany that if we can figure out how to substantiate the change of ownership from an individual to a tax advantaged type of trust structure or other type of entity structure, if we can figure out the mechanics of ownership, then every single strategy we've ever done for decades is on the table. The same stuff that we've done for private equity, venture, real estate, equities, gold, whatever, that's all on the table. If we can simply figure out how to put Bitcoin in a trust of some sort to then get these benefits that we're looking for. And so I did some really interesting work for that client. And because my background is, I've done a ton of education through the years where I'm a presenter in continuing education for other professionals, I started teaching, how do you do estate planning with Bitcoin? And there was a lot of interest in that topic. And so before long, we started getting more and more clients that had significant Bitcoin positions. Like massive Bitcoin positions. And it kind of allowed us to then pivot our practice largely towards that focus. And so on the law firm side, we've continued to do complex legal structuring for clients who have significant Bitcoin positions, as well as other significant asset positions. But then an increasing number of those clients were wanting additional services that were beyond the scope of what the law firm is designed to do. We also saw an opportunity to take that to scale as an independent enterprise. So we still do have the law firm. Evergreen Legacy Planning is the name of that organization. But Bespoke Group became a multifamily office, really specifically serving highly affluent clients with significant Bitcoin positions. And so we are a registered investment advisory. We've got an RIA inside the Bespoke Group. And within Bespoke, in addition to helping shepherd the clients' strategies over time, helping them get the most out of the legal strategies that they have, whether we set them up or some other law firm set them up. But we also facilitate qualified custody of their Bitcoin, as well as their gold, their equities, their fiat assets, whether that's qualified custody with custodians here in the US or offshore. So we can do qualified custody for Bitcoin, as well as pretty much any other asset, whether it's in Singapore, whether it's in Liechtenstein, whether it's in Switzerland. So whether it's in Canada, we can support that, so clients can actually now hold Bitcoin along with their other assets in title held structures that are not on a financial institution's balance sheet, that are in non-US dollar denominated terms, so they can get some de-dollarization of their Bitcoin positions, as well as whatever else. So it's been really an interesting ride. So that's what we do. We're law firm on the one side, and then we're the multifamily office on the other. And I would say that we don't believe that there is such a thing as an expert really in anything, but we're pretty damn good at what we do.
Yeah, I would go as far as saying you guys are experts. I'll embarrass you a little bit on this pod. I used to do it in meetings back at Unchained, where I would tell folks we're talking to about Bitcoin finance. It's like there may be somebody that knows the Fed better. There may be somebody that knows Bitcoin better, but there's nobody on the planet Earth, and I'd point to Croesus that knows Bitcoin and the Fed better, they combine. And I would kind of put you in that same realm when it comes to the work that you guys do on complex estate planning and Bitcoin, because it's still so early. And as we're seeing, that's where a lot of alpha and opportunity exists, because you mirror these two like disparate things, you put them together, and then the market has been asking for them, and you end up being a leader, and then you can pave the way. And so that's where I've been really excited to have you on and share the message. And I think it's important, like that while you work with very large and affluent clients, it's always been, since I've known you, your interest in sharing the knowledge and information, because you have that asymmetry, and it's important not just for affluent. It's important for me, Marty, Jesse, just the mere plebs that have small stacks, to protect it outside of certain liabilities or things that could happen. And so maybe that's a good way to kind of dive into how it's important from across spectrums. I think that was something I was ignorant to, is estate tax and what that means if we pass away, and how that's changing, or how do we like just actually plan for revocable, irrevocable trust, and why that matters. Maybe if you talk a little bit about that, could be good.
Yeah. And Matt, I hear there's something changing about estate tax or some threshold, if you want to touch on that too.
Yeah, I'll probably touch on that first, because it's probably the easiest. There's a built-in expiration date on the tax law. In 2017, President Trump signed the 2017 Tax Act. And what that did is that doubled the federal estate tax exemption from $5 million per taxpayer to $10 million per taxpayer. And every year that value gets adjusted for inflation. So this year, an individual in the United States can pass up to $12.92 million worth of whatever wealth they've got to their beneficiaries without any federal estate tax at all. Now, there may be a separate state level estate tax, but from a federal estate tax perspective, 12.92 per taxpayer. So that means a married couple can pass up to 25.84 million without having to worry about the federal estate tax. So, I mean, obviously, the vast majority of people in the United States don't have an estate tax problem. But the nature of these tax bills, these revenue bills that get enacted, is there's a wonky provision I'm not even going to go into, but they all end up with an expiration date called a sunset date or a sunset provision, which means that this law that went into effect in 2017 expires 12/31 of 2025. So what that means is Congress, without lifting a finger, without doing anything at all, the law will automatically revert on January 1, 2026. We're going to wake up on New Year's Day with a raging hangover, and it's going to hurt even worse because we know that our estate tax exemption just got cut in half. So we're going to wake up January 1 of 2026, and the exemption has been cut from 10 million plus inflation to 5 million plus inflation. And the first dollar over the exemption amount, whether that's today or in 2026, the first dollar gets taxed at 40 cents on the dollar. So it's a usurious level of tax, in my opinion. I doubt I'm going to get a whole lot of resistance from this crowd, but it's a very high tax rate. The reality is there's a lot of kind of structural gymnastics we can go through to help people with estates that are much, much, much larger than this, 12.92 million. We can structure them in ways where they will never pay a penny of estate tax. There's a lot of work that goes into that. But 40 cents on the dollar really starts to pay for itself. A couple of things I wanted to zero in on real quick, though, are there is this state level estate tax that's just, various states have them. Most states don't. But like Washington has got state level estate tax, Maryland does, New York does. There's a handful of states that still have this state level estate tax. So people who live in those states, they kind of have two bogeys to look out for. They've got the big one, that's the IRS on the federal estate tax, but then they've got their state revenue authorities as well. So the planning gets more complicated for clients there. But Michael, one of the things I wanted to zero in on with you, kind of to your point, pleb level planning, that's me too, guys. I mean, one of these days, I tell my wife, I aspire to someday need my services. I don't today, but the reality is, regardless of how big your stack is, or really what the composition of your estate is, everybody really needs to have some level of trust-based planning. Whether that's a revocable trust, which is like the baseline for everybody, or one or more types of irrevocable trusts, which you get into for tax and other reasons, you ought to have some type of trust as the base layer of your plan. That's like your L1 protocol, if you will, because what that does is that allows you to seize control of the decision-making process. If you become incapacitated, or ultimately when you die, you privatize things. Because if you don't have, if you have no planning at all, or if you have a will that you've used as your base layer of planning, all you've done is now send the people that you care the most about into the courthouse of the county courthouse where you died, in the county where you died, to then deal with a judge and say, yes, Your Honor, no, Your Honor, here's what, Michael's dead. Here's his will, or hey, he didn't have a will. Here's who's entitled to his stuff. And they have to complete an inventory of the assets in your estate, and they're going to inventory your laptop. They're going to inventory your key signature devices, and the judge is going to say, what the hell is this? And they're going to have to disclose that you had a Schwab account, you had a stack of gold in a fire safe at your house, you had a house, you had a car, you had a fiat account, and you had Bitcoin. The judge is going to say, wait, what the heck is that? How is your fiduciary going to be able to report back to the court on whether they made sound fiduciary decisions with your Bitcoin stack? regardless of how committed you were to Bitcoin during your lifetime, guess what? You're dead. And so now somebody else is responsible for managing the assets that you left behind for the benefit of the people you left behind. And if you don't have clear instructions, ideally in some privatized manner, like again, revocable living trust, that's the most democratic strategy that there is out there. Everybody, without exception, in my opinion, should have a revocable living trust as the foundation upon which the rest of their plan gets built. And for the vast majority of people, that's enough. But within that trust, you have to deal with things like Bitcoin, because for so many clients, certainly the clients I see and the people, I think the guys on this broadcast here, a significant portion of our wealth is denominated in Bitcoin. So, we've got to deal with some pesky legal issues and fiduciary law issues in order to equip our surviving spouse, our surviving partner, our parents, our kids, our friend, whoever is going to serve as the fiduciary. We've got to equip them to deal with this asset in a way that allows them to protect themselves. Because if you have got a big stack of Bitcoin relative to everything else, and then Bitcoin enters one of these protracted bear markets where now we're in a trough, well, if half of your wealth is Bitcoin, which is not uncommon, could very well be 70 or 80% of your wealth for a lot of our clients. How are you going to justify the fact that you didn't divest even in this bear market? So you have to plan for all that stuff, especially if you're a Bitcoiner. So I'll kind of pause there and see how that lands with you guys.
I think there was two things, if you can expand on that. I don't know if you fully mentioned, but like when I think of some of this stuff is like what inspires action, and the things that I've heard from your colleagues were when I'm alive, it also is important for the revocable because of just our where we sit on the risk profile, whether it's being in Bitcoin, people knowing we're in Bitcoin, and somebody sues us, and now that's available for some kind of court action. But then the other part is basically the market selling by the family because of the requirement if you're incapacitated and they see this volatile asset. I think that really resonates or would resonate with a lot of folks holding Bitcoin because they're thinking about it as a multi-generational asset, and the fact that it can be just market sold because they didn't have the right planning instead of actually going to whatever was written in a will, I think really would wake, or at least bring to light that it's not as simple as just putting in a will and saying here passes to somebody, that this order of operations, if somebody leaves the earth, it could just be sold in dollars given to that individual. And then there goes the estate tax as well.
No, 100%. So a couple of issues I want to provide some clarity on. So it's really important that folks understand that if the trust is revocable by you, you've got zero asset protection. Why? Because you control the trust. You set it up with your own assets. You're the trustee. You're the beneficiary. You got the power to revoke. You get sued. That revocable trust is not going to help you one bit. What the revocable trust does do is it privatizes and streamlines the process of managing your assets if you become incapacitated. So the people that you want to step into your shoes can do so. They've got the power to do that without having to go get appointed by a court to do that. And then when you pass away, same thing. The trust itself didn't die, just the person who set it up died. So now a successor trustee or a backup trustee steps in, and now they manage the trust assets for the benefit of the beneficiaries. Maybe it's a spouse, partner, kids, whatever. But we can do that without having to go through the process of court proceedings, so long as the trust instrument is very clear, giving the powers to deal with these complex assets that may be heavily concentrated, and provided that anything that has a title is actually titled in the name of the trust. So for people who are looking for asset protection, that becomes a really sticky wicket. I mean, it's possible, but it's complicated. You're only talking about irrevocable trusts in those kind of contexts, and you're only talking about irrevocable trusts established in a handful of jurisdictions. They're, like I said, they're complicated. And what you have to do is you have to effectively air gap yourself from the control over the trust, of the property inside the trust. So you create a trust for the benefit often of somebody else, And then there are some ways kind of strategically you can create some indirect access back to you. Not going to get into the details there, but you can create these trusts that can often be shielded from future creditors. There's nothing you can do if you've got an existing creditor right now. If the claim has already arisen, there's not much you can do about that. But you can protect yourself for that future rainy someday if you do it very carefully.
Very helpful.
Yeah, and it's funny. It wasn't until like a couple of years ago that I really became aware of like trust structures and thinking about it from a personal point of view. And it seems like, correct me if I'm wrong, Matt, but it seems like it's becoming like a bigger sort of trend. People are getting smarter about these structures, being able to secure and preserve wealth over time. And I imagine this is a product of what we're seeing with the government, whether it be via the estate tax or simply the fact that they seem to be getting more and more Orwellian as time goes on. Have trusts been misunderstood, or has the awareness around them just been lacking for a certain period of time, and now people are beginning to get wiser?
I like to think so, Marty. I mean, I like to think that the American consumer is getting a little bit more educated. One thing to bear in mind is that it doesn't really matter where in the U.S. you live. You can avail yourself of the benefits of planning under any state or any country, for that matter. So one thing I'll mention is that very often, if we've got clients who happen to live in a state that's got just particularly poor trust laws, maybe the trust laws don't provide a level of privacy. Maybe the trust laws give the beneficiaries of the trust more power than the creator of the trust wants to give them. And so we can be creative in finding the right jurisdictions to structure the estate plan. So you might be living in Colorado or California or Alabama or someplace like that, but we can create structures for you. We can create trust for you in really desirable jurisdictions like Wyoming, like Nevada, like South Dakota, like the Cook Islands. You've got the freedom to select what law is going to govern the interpretation of your trust. And now really we're kind of talking about that in the context of irrevocable, more complex trust planning. But I do think that people are kind of awakening to this idea that there's a better technology for wealth succession than just using a will. It's like people are buying Bitcoin instead of gold. Hopefully people are establishing trusts instead of using a will, or God forbid, doing nothing at all. I think people realize, especially in the Bitcoin space, a lot of wealth has been created pretty quickly in the last 14 years. And I would say really, especially since 2017, there's been tremendous wealth built through the various cycles that we've seen, even in the 5 or so years I've been part of this conversation. I guess 6 years now. So there's been a tremendous amount of wealth. And when people who were mining Bitcoin early, or even just kind of speculating on it early, now they've got a family. Now they are maybe in their 30s or in their 40s, and they realize, wow, this is consequential. And I'm sure not going to sell it and go buy something stupid with it, or something that's dollar denominated and can be basically printed into oblivion. I'm going to hold this. I'm going to hold it long term. It's going to be a transgenerational asset. I mean, hopefully the word is getting out that there's a better technology for managing your wealth than just, dying with a will or with nothing at all. And the revocable trust is, like I said, it's like base level planning for literally everybody.
Yeah, it's actually, it's jogging back when we first met, and you really recognizing, having the expertise on this side, and then finding out the power of multisig and how that changes a lot. I think that's changed a lot of like Bitcoiners, at least we're still early, but perceptions of estate planning because of private key ownership. It is nuclear in the sense that you can't really give up that material, because even if you trust somebody, in the event that they do not safeguard that material, if you're incapacitated or if you're still alive and they don't protect it, the reality is your funds could be gone. That changes with multisig and how you're able. Can you speak to any of that, and just like whether it's from examples of ways you've seen it structured, or just like the power of how that kind of changes inheritance, the dynamic that hasn't really existed? I feel like it's just really starting in the market, where you have like different solutions, or at least different protocols in place, so people can navigate that, where they can be sovereign in the sense that they have unilateral control of the asset by having keys distributed multisig, but then also planning for a future where their beneficiaries or whoever's part of that can actually recover. Because historically, and correct me if I'm wrong, but that really hasn't existed, because you either had one side holding a single, sig seed, or some kind of extravagant way of how you would shard that, but that ultimately adds a bunch of complexity, or the other side, as it's sitting on Coinbase or some other third party. While that's good and may fall under certain qualified custodian standards that certain people need, at the end of the day, that's still giving it up, which a lot of people I think aren't comfortable with. Yeah.
Yeah, I mean, there's a lot in that, Michael, but I'll speak to that a bit. So yeah, multisig definitely helps a ton, especially in the context of this revocable trust centered planning, like we're talking about, like this. But it's important, I think, to distinguish between the mechanical transfer of key material, which multisig helps provide. I mean, I use multisig. I'm an Unchained customer as well, on my personal stack, if you will. But that definitely helps a lot, because, as I think everybody here knows, obviously you can select who has key material, you can establish the quorum rules, and that facilitates the mechanical transfer. So if I get hit by a bus or slip off the side of the planet somewhere, the 2 out of 3 that I've selected, they're my backup signatures, no problem. They now still have control over my key material. That's great. But what if the people that I give the key material to, I don't plan to give my Bitcoin to? I want them to hold that and manage that for the benefit of my children. So now we've got the basically this custody, if you will, that's now still multisig, but these people who are controlling the Bitcoin, are they the same people that I want to have as the trustees of my trust? Maybe not. I mean, maybe they're really great at Bitcoin, but maybe they don't know my kids. And so maybe they're not the best people to serve as the decision makers for my kids. Now we got a complication. And so, if we're only concerned about mechanically transferring Bitcoin to somebody else, multisig is a brilliant solution. And like I said, I use it myself. But when we think about the broader benefits that establishing a trust can provide, I've got the ability through a trust I create. I can create a trust for the benefit of my wife, the benefit of my children, in a way that can provide them almost impenetrable asset protection once I die. So, like if I die, and through my estate plan, I've established a trust for the benefit of my wife. If my wife, in a profound lapse of judgment, were to remarry, because you're not going to get better than this, babe. I mean, come on. But if she were to remarry, and that marriage ends in divorce, I would not want the wealth that I've built with her, especially the Bitcoin that we've accumulated together. I wouldn't want that to be subject to the claim of her soon-to-be ex-husband in a divorce proceeding. So I can design the structure for her that provides asset protection for her. Same thing for my daughters. I can pass my Bitcoin or my other wealth to them with a protective trust structure around it, so that if my children end up getting sued from a business creditor, they end up getting, whatever happens, they just get sued for whatever reason, a creditor would not be able to reach in and take those assets away from my children involuntarily. And so we got to deal with, I think, both the mechanical transfer aspects of Bitcoin, but also the kind of more qualitative outcomes that we're looking for, like the privacy, like the protection, keeping my kids from saying, hey, cool, Bitcoin is $100,000 and now I've got a couple $100,000. I'm just going to go buy a really fast car and wrap it around a telephone pole and have nothing to show for myself. If I don't have a trust in place that puts some guardrails on how the money gets used or how the wealth gets used, There's nothing stopping that from happening. So, we got to kind of think through not just the mechanics of key management, but also the more qualitative guardrails around long-term wealth preservation for the family. And if my trustee that I've appointed to be the decision maker in my trust for the benefit of the people I cared about, if that trustee does not have control over the key material, just like they've got to have control over my Schwab account, just like they've got to have control over the title to my house, they've got to be able to do their job. So to a certain degree, these signature controls start to break down, but we can build some protections in place by having multiple trustees, just like we've got multiple signature holders. And so maybe each trustee holds a signature. Or again, when we're dealing with really large stacks and we're needing to enter into some tax leverage planning, multisig doesn't work. Where we have to use something like a qualified custodian, because we have to substantiate ownership of the Bitcoin in the name of the trust or the entity. And the only way we're going to do that is with a qualified custodian, at least currently.
Yeah, it's so fascinating because, or go ahead, Jesse.
I was going to take it in another direction. So yeah, you go first.
I was just going to say it's really fascinating because they're different functions of the market, but we talked about this earlier in the week with Marty. It's like, this is the natural maturation of a process, and like what you just described, like it sounds extensive. It's the requirement for large amounts of capital to come in a very similar way that what we're building at OnRamp. It's like there's certain institutions that need certain assurances, or there's certain high net worth individuals that need mapping of what the old world looks like in traditional assets to be able to recover or know that they have, like you mentioned, the mechanical aspect of moving the funds, but then also the legal wrapper around it that mirrors what they're used to in their other assets before they can step in. And so I think what you just described are the process and things that are just like, we're still early, but having them out, being able to articulate them really, and we've seen this firsthand with folks that we know. So it's really fascinating to see, like, this number of years in and stuff like this starting to happen. And it also, 30K makes sense for certain people. When that price 10Xs, it makes sense for a lot more people. And so it's like, just again, building that plumbing for people to step into the market and feel comfortable in the way they do it.
That's right. And I don't want to step on Jesse real quick, but one thing I wanted to circle in on is that, this is just part of the natural maturation of a market. We kind of have to have a foot in both worlds right now. We've got the world as it is. We've got the fiat world that is kind of the dominant world. We've got the legal frameworks that we have right now. We've got the tax frameworks that we have right now. Then we have this impeccable, pristine asset that really is the bridge to the future. And so, I don't think it's realistic to think that, before Bitcoiners start to die, Bitcoin is just going to take over the world and everything's going to be a Bitcoin standard. I think it's going to be a longer process than that. And so I think that the more likely situation is that organizations like OnRamp, organizations like Bespoke, serve as a bridge between the world as it currently is and the world as it's in the process of becoming.
Absolutely. Yeah, that's how we see it too. And obviously with the on the nose OnRamp name choice, it's a bridge. I loved what you pointed out about trustees being potentially key holders in a multi-sig arrangement, and how that can be done. It's like, it makes a lot of sense that creates that avenue. And so I was going to ask about a couple questions for you. Of thinking about the math, if 5 million plus interest plus inflation is going to be the threshold in the future, and let's say Bitcoin 100x's over the next couple decades, that would mean that anybody with 50,000 or more today in Bitcoin could then have an estate greater than the allowable limit before taxes kick in. So that would be a lot of people, a lot of Bitcoiners. And so I guess when does it make sense to start setting something like this up? And what type of Bitcoiners do you think need this who aren't currently thinking about it?
Yeah, I think that's a great question, and your observations are right on. I know it seems a little bit counterintuitive, but really the ideal time to plan is when values are soft. Because if you, I mean, I'm taking my own advice on this. When I saw Bitcoin start to really pull back, I thought, I've got a very high conviction with a low time preference, long hold threshold for Bitcoin. So I created for myself an irrevocable trust that would then put the value of whatever assets I put in that trust out of my estate for future purposes. So I can get the assets out of my estate at today's value, and then all the alpha that takes place between now and then, if Bitcoin goes 2x, 5x, 10x or more, all of that lift is out of my estate from a estate tax perspective. Now, I don't currently have a federally taxable estate. I could die today and my family have no concerns about the federal estate tax. However, I don't plan on checking out anytime soon. And I have a long-term conviction that Bitcoin is going to be a long-term store of value asset. I got out of my estate this year. I started, or maybe it was last year, I can't even remember, but it's like I started just shunting the biggest part of my Bitcoin out of my estate because it's stuff I don't plan to sell. I have a long-term conviction on it. Might as well get it out. Now, granted, I've got the luxury of being in the business. I can set up one of these things for myself for free, and I understand how they work. But I would say that people who have, call it, I don't know, today's terms, mid six figures worth of Bitcoin. Let's say that you've got, you call it 10 to 15 Bitcoin, then, and you've got a long time horizon, and you've got a high conviction, something like this might make sense. And I'll tell you, another thing that we've done. I've done this personally. So, I know not only that you can do it and how to do it, I also understand what it's like to live with these types of structures. It's legal. So we did some wash trading on our Bitcoin as the prices started coming back. So we could kind of reset our basis, claim some losses, reset our basis. And so now all that lift is outside of our estates, and I was able to harvest some losses all while this stuff is sitting inside this trust. Now, the sacrifice that goes along with that is that I don't have my key material. I've got a trustee who uses a qualified custodian, and I have visibility, and I have a high level of confidence in that fiduciary, that trust company that I use. I can fire them at any time I want. I can replace them with somebody else. But I have to trust in a trustless environment. I have to trust. And so for me, again, this is the challenge of having to navigate the world as it is right now. Because otherwise, if I have a long-term conviction that Bitcoin is going to increase in value, and I want to give that to my wife, maybe someday my kids or beyond, in a way that is to their advantage, that's what's required. Because I do believe that the days of thinking, oh, I'll just kind of create a private key succession mechanism with a dead man switch in a single sig, or I'll create a treasure map with my sharded BIP39 phrase and, lead my family to find my Bitcoin someday. Those days are gone because the IRS and other taxing authorities are getting very savvy on how to trace down blockchain transactions. And one of these days, somebody's going to want to monetize that Bitcoin. They're either going to sell it, when things are at peak froth, or they want to borrow against it. At some point, they're going to get KYC'd on that Bitcoin. Sorry to be the wet blanket. That's the world we live in. So then they're going to have a compelling story to tell under penalty of perjury with risk of incarceration where that Bitcoin came from. And if they don't have a compelling story that they can back up, they're going to have some significant problems. So we have to treat this asset, we have to respect this asset as the transformational store of value asset that it is, and give it the planning it deserves.
Those are some really compelling points. But I can't help but observe that you chose an irrevocable trust.
I had to.
Okay. And so,
I had to get the benefits that I wanted, because
okay.
when I have a revocable trust, just like the revocable trust that Michael and I were talking about, just like that revocable trust doesn't give me any asset protection, it also doesn't get the value out of my estate, because I
Yeah.
control the trust. And so it structures the privacy and it structures the inheritance for my family, but the value of the assets in the revocable trust are included in my estate. And there's a whole litany of tax code sections that tell you that. But the specific type of irrevocable trust I created is called a completed gift, which means that when I establish the trust, I take my hand off the wheel. I say, okay, I've got to entrust somebody else to manage this. Here are the terms. And if they don't follow those terms, they get sued and they can lose their license. And so it's punitive for them if they mess up. But I take my hands off the wheel. And then once I put assets inside that trust by transferring from my unchained multisig, transferring from a single sig sovereign device into a qualified custodian in an account that's titled in the name of my trust, that marks the completion of that gift. I then have to report that gift on a gift tax return to the IRS. And so what that does, I'm not going to pay taxes on that, but what that does is that erodes part of my estate tax exemption. So I did remember, because we got to do the gift tax return this year. I'm on extension, so I got to file it in October. But I've got that 12 point, whatever it was last year, 12 point some odd million, 12.3 or something like that last year. I had $12.3 million worth of exemption, and I put, X dollars worth of Bitcoin in a completed gift trust. I then have to report that I've now used up X dollars worth of my exemption. And now I have my 12.92 minus X as my remaining exemption. So now I've basically told the IRS that I have put this outside of my estate for the benefit of the people I care about in this type of legal structure that works that way. Then once I die, whatever, all the alpha, Bitcoin hits new all-time highs, goes 3x, 5x, 10x, whatever, all of that is outside of my estate when I die. And because of the type of trust I established, when my wife dies, when my children die, when my grandchildren die, when my great-grandchildren die, it's not taxed. I chose a trust in Wyoming that allows the trust to continue for 1,000 years without distributing the assets out. So that the value, the assets in the trust can be used for the benefit of my beneficiaries, but unless and until the trust actually distributes the assets out to the beneficiary, it's not subject to estate tax for many, many generations. And so the value can continue to compound generation after generation after generation in a highly tax efficient, asset protected structure for the benefit of the people I care about. And so that's the kind of trust I created. That's the kind of trust that we create for clients who have significant wealth.
Yeah. Wow. It sounds like Wyoming irrevocable trusts might be Bitcoiners' best friend.
Wyoming is a good one. I'll tell you that, like I said, your mileage may vary. Different jurisdictions have different laws. South Dakota is a great one. Nevada is a great one. Wyoming, super bullish on, just because they're pretty Bitcoin friendly. But I would tell you that their trust laws generally aren't the best in the world. They're good, but they're not the best. But for Bitcoin, probably good enough.
I think we were talking about 7th generation thinking last week on the show. This goes well beyond that. You're going way further, which is, I completely agree. Like, Bitcoiners need to be thinking about this. Like, again, after our conversation earlier this week, I'm certainly thinking about it much more seriously.
Yeah, Marty, I think, I know we talked about it last week. I've made this statement before. I do think that, proactive planning is the ultimate exercise in sovereignty. We talk about not your keys, not your coins. I've said that a million times myself. I've believed that. And, I agree that to a degree that's true. But if we don't, exercise our own sovereignty in creating a plan that privatizes the process, that establishes the ground rules, who's going to be appointed to make decisions, how they're going to make decisions, how the assets are going to be used. If we don't do that, We're not sovereign. And I would say that, again, kind of, rewinding a little bit, you got to look at this as a spectrum. You don't put all of your stack in any one thing. You shouldn't have all of your stack in a self-sovereign. You shouldn't have all of your stack in a multisig. You shouldn't have all your stack in a single qualified custodian. It's a matter of degrees. And so I've got some walking around Bitcoin. If I wanted to find a lightning channel somewhere and buy Michael a coffee next time I see him, cool, I can do that. And I've got that at the ready. If I want to fly around the world with a key signature device in my pocket, I can do that. I've got a qualified custodian that's got an account for my revocable trust. I've got a qualified custodian for the biggest part of my stack in this irrevocable trust. I think that it's a matter of diversifying custody, diversifying control. But the control really begins with the Bitcoiner, I think, taking responsibility for this wealth in a frankly kind of a grown up way.
You've talked about sovereignty early, and then this, and like I think of the ultimate sovereignty is like education, right? Like if you think about the past 15 years, there's been a lot of Bitcoin lost, and I think about what we're talking about now. In like 10 years, they'll laugh about how we're structuring this in the same way that people were doing faucets, and I'm sure Marty's probably lost more Bitcoin than I've ever accumulated, and that the multisig, we talked about it, and you referenced. This is the time. It's counterintuitive to set up the trust, and we talk about it all the time with custody. It's the same thing. It's like no matter what your setup is, you always want to think about if the price is 10x what it is, because it inevitably will be, and you don't want to be left scrambling at that time. And so it's just education, time spent, and it's this thing I keep anchoring to that we've witnessed the past few years, really, but it's been since, again, Bitcoin's inception. It's very easy to like really get Bitcoin, your hands on it. It's hard to hold it long term, whether it's to the volatility, the exchange hacks, or to what you just described, different ways that the law and rules can basically take it in the court of law, or if you're incapacitated. And so it really it made me, I think we talk about it sometimes, it's like Bitcoin's alien technology. It really is, in the sense of like there's just this whole new rule set that you have to plan around, from the custody all the way to how the legal wrapper is, how it takes care of it, and it continues to evolve, and the tools and the laws and the trust and the jurisdictions evolve with it. And that's part of the education and like the time and the proof of work and learning this stuff, so that and that's part of like understanding where it can go long term, because I don't think what we just talked about in the hours that each person on this pod's independently looked at this would never do that if you didn't have this vision of a future where Bitcoin is worth X and facilitates all trade across the world. And so it's just, all this is just anchoring back to the point of like, it really comes down to education, which is the ultimate sovereignty, because then you can think for yourself and plan for yourself.
And that is the proof of work. I mean, that's the proof of work in what we do. I mean, I think that's a really good kind of reference point, which I hadn't connected before, Michael, but I think you're exactly right. I mean, you have to put in the work. You have to put in the work to learn about Bitcoin. It is alien technology. It's complicated. It's really hard for a non-tech guy like me to get his head around. And then you've got to think through, like a guy like me. I mean, I'm an attorney. I'm a legal strategist guy. What the hell do I know about Bitcoin? Well, I put in the work, and I continue to put in the work. And now I've dedicated my careers, my businesses, building a team that spans the US into Europe, building a team around this. And so, yeah, you got to put in the work. It's absolutely fascinating, I think, to see I don't know if this is where you want to go with this, but one of the things I would maybe kind of highlight is that the fiat wealth is pivoting to Bitcoin in a way that I am both surprised and encouraged by. We get to deal with clients at the very like apex of wealth, like the 1% of the 1% of the 1%. And I was speaking earlier this week with a gentleman who is 80 years old, is founder of a well-known public company, had a big liquidity event back in 2010, 2012, something like that. and he was talking to a mutual friend of ours, mutual acquaintance, and this guy has positioned. He used to be a typical 60-40 equities to debt or equities to bonds kind of guy, like because it worked. To now he's about 20% equities, heavy cash, a mountain of gold in Zurich, physical gold, not paper claims on gold, and he wanted to talk Bitcoin. And he's like right on the edge of making a fairly significant move there. And he wanted to talk to me about it from a legal structuring, what do you think kind of thing. I got to tell you, that is not an unusual conversation for me. I've got, fiat whales that are now increasingly interested, not in crypto, they're interested in Bitcoin because it's a store of value. And they see it as a long-term store of value that's unlike anything they've ever seen before. So the word is getting out. So I think that's just super encouraging to see, and we're going to see more of that over time.
Yeah.
I echo the same. Go ahead.
I was just going to. It reminds me of Michael Saylor's melting ice cube point of if everybody has a melting ice cube, and billionaires feel that more than anyone, because when you do the numbers on that and you realize you're losing 5-10% in real terms every year from holding cash, that's a pretty penny. And so it's fascinating to hear an 80-year-old who, frankly, 80-year-olds barely understand the internet. So Bitcoin is quite a stretch, but the pain point is so acute that this can resonate, and it's connecting and it's virally spreading.
Yeah, I was just going to say to your point, Matt, like on our side of the world, like it's been very interesting to see the endowments and pensions and large institutions looking at it. It's not like a joke anymore. It's just like, how do you size it? What's the total opportunity? Is it gold? How do you, the big thing, custody? We've seen what's happened in the past, what's the difference between digital assets, Bitcoin? But I keep thinking it's like risk adjusted, like at this exact time, can you think of a better time from whether it's building a business or allocating? Because it's like you have this $500 billion market cap asset, and it punches so far outside of its weight class. And the fact that basically everybody on the planet Earth, or at least anybody connected to an internet, has heard of the brand Bitcoin. And at the same time, it sits here as this little, like, what else is $500 billion as an asset that we know of? That's small. So it's a fascinating time to be alive to build something in this space.
This is the dawn of a new industrial revolution in some cases. I mean, I don't use that lightly, and I know that falls on friendly ears here, but I mean, we really are at a generational, not even generational, probably multi-generational inflection point. I mean, this is an enormous period of evolution in human history, and I think that the sovereign individual authors kind of have it right that borders matter less. We are tribes of shared interests as opposed to tribes of a particular nationality. So, kind of rewinding all the way back to the macro conversation, what does this mean geopolitically and as a republic or whatever? I got to tell you that for a lot of our clients, they don't care. They have less faith in preserving fiat denominated wealth. Especially U.S. fiat denominated wealth. At a minimum, they want some exposure. They want direct ownership of non-U.S. denominated fiat wealth. So they want things like the Swiss franc. They want other harder fiat assets, but they also want non-fiat assets that are not U.S. dollar denominated because they feel that wealth eroding underneath their feet, and that's real. And I think that's just going to accelerate. I don't see any sign of that changing, in a long time. And I think that's a great opportunity for guys like you, guys like me.
Yeah, I mean, I'm glad you brought it back to the front, because I wouldn't be able to live with myself. We were talking about all these great countries and Schelling points for talent. The great country of Texas, I think, is a wonderful place where you don't have to get in water. Where majority of the people on this call have decided is their Schelling point to build a better future. So, we talk about Singapore and India and these other places like Switzerland, but I think Texas is going to be just a drive down 35 if you're coming from up north.
I think my tires would melt on the interstate on the way down there.
You get a snowbird. You got to pick your spots.
Well, we got to get the Texas Bullion Vault to hold Bitcoin. We got to convince the state of Texas to hold some Bitcoin on the balance sheet.
That's just a matter of time. It's just a matter of time.
It really is. I mean, it's you mentioned how many Bitcoiners in the United States. It's like you got 25 million sitting in Texas. So they don't even know it yet.
Yeah.
Well, I mean, Matt, we just described what you just described with like the caliber of clients that you have that are beginning to turn the corner on Bitcoin. When you factor that in with like what you were mentioning with the endowments and pensions beginning to really give Bitcoin a fair shake, and then you throw BlackRock and their ETF in the mix, and then you backdrop that with the subsidy halving that's 9 months away. I do think we have the potential for this next cycle, with not only the backdrop of the halving, but everything going on in the macroeconomic landscape as well, to be awe-inspiring. Like, I've been through 4 cycles now, and I'm mentally preparing for this next one to be like anything I've ever experienced to date, with all those variables in mind. And again, really linking back to the conversation we had earlier this week and then building on it today with this conversation, like setting up these structures right now seems like a very smart move for anybody. And like Matt said, like, even if you only have 500 grand worth of Bitcoin, 15 to 20 Bitcoin right now, like, if all that money does flood in and we have this supply inflation reduction on the horizon, like, it makes a lot of sense to begin setting this up as quickly as possible.
Yeah, I think we all kind of get excited about the price action because we got the luxury of thinking about that here in the U.S. And the ETFs that are inevitable, whether it's this go around or somewhere down the road, it's inevitable. I personally believe that Larry Fink is going to get his because he's Larry Fink, and I think that there will be a few others. Invesco will get theirs. Fidelity will get theirs. There'll be a handful of them. That's going to make these companies acquire Bitcoin so they can then issue their paper claims against Bitcoin. And I think that, you factor in the halving cycle that you're talking about next year. I think we'll see price action in US dollar denominated terms drive Bitcoin to all-time highs on a large scale. Marty, I share your perspective that, we're probably going to see alpha in Bitcoin unlike anything we've seen, perhaps. I mean, certainly in the 6 years I've been involved. But more than that, I kind of think about this more in the devaluation of the dollar terms. I sit here in Colorado. I'm outside Denver in the mountains a little bit. So, we've had a major run up on real estate, just like you guys down in Austin have seen. And the question then becomes, is my real estate really that much more valuable? Or is the dollar just buying that much less? The same thing is going to be true about Bitcoin. It's going to be great. We're all going to be super stoked to see the value of our Bitcoin go up in US dollar denominated terms, because guess what? The tax code is also denominated in US dollar terms. However, I believe that Bitcoin is this pristine asset, but are we going to see the value of Bitcoin go up because Bitcoin is inherently that much more valuable? Or is a sovereign currency that we measure it by just that much more eroded? It's probably a combination of those things, but I think the erosion of the value of the dollar is happening at a much faster pace. So, I mean, I talked to my wife about this. Our house is a very modest, small house, just happens to be in a great community. The real estate that I've had has gone up precipitously in US dollar denominated terms. But it's like, is it really worth that? Or is it just because, everything else is expensive? Everything else is expensive, not because it's worth more. It's just because the dollar is worth a heck of a lot less.
Yeah, I mean, I think that ties back to, I don't think it's like we mentioned Texas or certain places. It's not like necessarily just a meme. It's like there's food production, there's beef, there's oil, there's all these things that are natural to when a dollar loses the ability to coordinate economic activity. You need actual real goods and then a form of money that people will accept. And so that's like the long-term part of all of this, is you want to be in an area that can have our own soft landing, for lack of better words.
Yeah. No, I think that I completely agree with that. Like Bitcoin's appreciation will be driven by the devaluation of the dollar in part, and then also in part due to people recognizing its inherent fundamental value. And I think that will be very interesting to observe as we head towards 2030. Like how quickly do people selling houses, buying houses begin to denominate the value of those things in sats and Bitcoin? And once we get to that flipping point where you go to a bodega, you go to a corner store, and you have Bitcoin prices alongside like US dollar prices, and maybe the US dollar prices are changing every day, but the sats are staying somewhat stable. I think that's when we'll know that the Bitcoin standard is upon us. Yeah. But before we wrap up, because I remember, Matt, you really wanted to touch on this when we were talking earlier this week. Like we've been saying, the government's been, good night, buddy. The government's been encroaching on our civil liberties, and this is really going to come into effect, I believe, in the beginning of 2024 in terms of what needs to be disclosed to FinCEN by LLCs from a privacy perspective.
Man, you're really going to push my buttons now, Marty. I mean,
you said you wanted to touch on it, so
yeah. I mean, you're right. You're right. But I mean, look, this is the sign of a weak republic, in my perspective. When a republic or when a governmental authority can no longer rule with soft power, they have to start ruling with hard power. And I can't remember the year it was passed. Maybe it was last year. Maybe it was 2021, something like that. But I think it was 2021 that Congress, unfortunately, bipartisan, Congress passed a Corporate Transparency Act under the guise of, clamping down on funding of terrorism and all this kind of stuff and money laundering, whatever. So this Corporate Transparency Act then got sent over to the Treasury Department to go through the rulemaking process, which is this shadowy, murky process by which a whole bunch of bureaucrats who have never, made, altruistic decisions in their lives sit down and make rules about how do we interpret this Corporate Transparency Act. And as a result of these kind of backroom conversations that took place, a new body of rules under the Corporate Transparency Act, or the CTA for short, will now take effect January 1 of 2024, where with very few exceptions, most of the exceptions are kind of irrelevant, with very few exceptions, every single U.S. domestic limited liability company that's currently exists now or that is established in the future will have to register with the Financial Crimes Enforcement Network inside the Treasury Department to disclose the beneficial ownership and control person information of those entities, disclosing the full name, the address, the date of birth, and either the Social Security number or tax ID number or a special FinCEN identifier number. To just say, hey, look, you know what, we believe you guys are all above board, but you know what, just in case, why don't you go ahead and come on in and register. And by the way, if you don't, it's going to be $250,000 and probably a decade in federal prison if you fail to comply. And so every single limited liability company, even if you established it only for personal family wealth preservation, whether you're On-Ramp LLC or Bespoke Group LLC, or whether you're, Marty's Mad Stacks LLC or whatever it is, if it's a United States entity or if it's a foreign entity that has to register in the U.S. just because of the applicable state laws of wherever you happen to live, well, January 1, you're going to have about 30 days to comply with this law. And I get incensed about this because it carries with it the insinuation that if you have a limited liability company for whatever reason in the world, just managing family wealth, if you have that, you are assumed that you are committing a crime, because why else would you be registering with the Financial Crimes Enforcement Network? Now, granted, under the law, the database that you register with is going to be secure and private. And of course, it will be until it is not, at which point some nation state or some hacking organization that's got an axe to grind is going to penetrate this database. And now all of a sudden, they're going to have the name of every individual who's got a limited liability company. They're going to have their name, their address, their date of birth, the name of the entity, and their tax identification number to then do with what malefactors will want to do with that information. I think it's the most egregious overreach and the most egregious invasion of privacy that I've seen, even farther than the Patriot Act, so-called air quotes Patriot Act. And so we are working as hard as we can to find ways to establish structures for clients that don't pull them into the disclosure requirements of the CTA, because it's all well and good that we don't want to finance terrorism. I don't want to finance terrorism either. That's cool. But guess what? I live in America, and there's supposed to be a sense of privacy. There's supposed to be a sense of freedom behind our personal affairs. And the burden ought to be on the government to create a compelling case that I am violating the law, rather than me have to come in and register proactively with the Financial Crimes Enforcement Network to promise I'm not a bad boy. I think it's just a terrible, terrible thing. So people really ought to know about this. If your congressman ever opens the mail, I would encourage you to write them or email them. I can tell you I have tried, and I've got crickets from the leadership in Colorado. Maybe in Texas you'll get better mileage. But it's not maybe going to happen. It's already the law. The law is going to take effect in January 1. And the cost of noncompliance is very, very painful.
What does that look like in practice? Like go ahead, Morgan.
I was going to say it's disgusting, especially when you consider that the U.S. federal government is probably the largest financier of terrorism around the world. But go ahead, Michael.
I was before asking, I was going to be like, Marty Jones has been in a cage, and I think Matt was going to wake him up or let him out. But I was actually just curious. I'd rather go down the Marty Jones route, but I was just curious, what does it look like in practice from existing LLC in 2024 or net new LLC? Like, what is that? Sounds like a process that the government couldn't even handle, let alone.
Yeah, I doubt they have the infrastructure to take in all this data in the first place. Like,
well, guess what? It's not their problem. It's yours. It's not, the burden's on you. The burden's not on the government. So, the burden on enforcement, yeah, big problem. But do you want to be the guy who's not compliant and get the knock on the door by the FinCEN guys to say, oh, by the way, Marty, we noticed that you didn't register your limited liability company with us. Can we here's some nice jewelry. Would you like to have a seat in the back of the SUV, and we'll talk about it, in an undisclosed location. Probably not quite that bad, but, for sake of drama, perhaps. Yeah. It's again, it kind of gets back to my point that when you are a dying power, this is what you do. When you are a gerontocracy, when you are a kakistocracy, when you are in the waning days of your power, this is the kind of crap you do. It's, thank God for Bitcoin, as Cynthia Lummis likes to say. Thank God for options that give us the ability to at least move some of our wealth off of these shores in legal ways. I mean, we don't do anything that's illegal. We see the law, we see the tax code as a playbook, and it's there are advantages, there are opportunities, there are assets. The law is an asset if you know how to use it, and that's what we try to do. And until they change it, we follow the rules, and when they change those, when they change the law, we change what we do. But it's I say I'm probably kind of a legal strategist and opportunist more than anything else.
Yeah, that's almost a call for more legal minds to come into this space. We talk about it, that they're very rare.
I'd love that. I'd probably hire them.
Yeah. Well, thank you for the work that you're doing, Matt. I think it's extremely important. both on actually the services that you provide your clients directly, and then the education you're providing others in your industry to get them wise about what's going on so that they can onboard more people into these structures, and then ringing the alarm bell about what's going on with the CTA.
Yeah, it's kind of funny. I feel like I'm a crotchety old man shaking his fist at the sky and yelling at the clouds and telling them to get out, telling the kids to get off my lawn. And the older I get, the crankier I get. But I do think that there's just some. I think this is crap. I think that what we're seeing is just crap. And I'm just trying to do what I can to let people know that there's, the wheels are falling off the wagon. You need to do something about it.
Agreed. Yeah, I like to joke. I think I'm Bitcoin's 32-year-old boomer. We're kindred spirits here. I'm very much this way. It is. It's almost like a humiliation ritual.
I'm a Gen Xer. I'm 51, so I was born in '72, so I'm not quite a boomer, but I hear what you're saying. I'm definitely a boomer for Bitcoin purposes.
Yeah. This has been incredible. I know we had a new segment we want to roll out, but I think in respect of everybody's time, we can push that to next week, gentlemen. What do you think?
I think so.
Yeah, I think that's right. I think I will say for everyone listening, if you enjoyed this content, you might also like OnRamp's newsletter. Just today, we had Dylan LeClaire send out his weekly roundup of everything that's going on in the macro landscape. An incredible free research newsletter where he packages up everything that you should know from him spending all of his time in the market on Twitter and researching. And so that is available at onrampbitcoin.com/research. You also get you get 2 emails a week, one being Dylan's weekly roundup, and the other being a weekly email about an educational topic in Bitcoin. Often it's something that I've written. Recently, we had Macro Jack put out the Digital Gold Rush, which was an excellent historical parallel, digging into what happened in the California Gold Rush and how it relates to what's setting up right now for Bitcoin. Just a fun read for everyone. So check out onrampbitcoin.com/research. Put your email there. You can unsubscribe anytime, and I look forward to sharing more.
Shout out to Macro Jack. He was just pinging us in a separate channel that he ran into Dave Collum up in upstate New York the last Thursday.
Yeah, Dave DM'd me. Dave DM'd me over the weekend. I was like, "Hey, do you know this guy Macro Jack?" I was like, "Yeah." We actually went to the same high school, which is it's funny, small world.
Yeah, they put something in. I like to joke with Marty. They put something in his water down there. There's a lot of these Bitcoiners that are freedom-oriented, writing on Twitter under names. Yeah.
That was the focus of our high school. The purpose was to make sure that we left and knew how to write. So I guess it was worth it. But before we wrap up, Matt, where can anybody listening find out more about Bespoke Group and what you guys are doing? And how can they get a hold of you if they're interested?
Yeah, just the website is just www.bespokegroup.io. And because I'm an old man, LinkedIn is probably the best venue for me. I don't get a whole lot of value out of the Bird app, or now the X app, or whatever the hell that's all about. So yeah, LinkedIn, you can just find me, Matt McClintock, name's McClintock, and you can find me there. Yeah, and you can always find me through Michael. Michael's my man, and so you reach out to Tanguma, and he can get me.
We can send you some of the materials he shared. Those are some of the best materials I've seen in the space. So yeah, happy to pass along some of the stuff you guys have worked on.
Yeah, I mean, anything that I've given you, feel free to distribute, paper the world with it. And I'm waiting for like some on-ramp swag from you guys.
Yes, we do at some point need to make some swag. That is in the intermediate horizon.
Priorities, I get it.
Yeah.
2 weeks, TM. Well, Matt, thank you so much for joining us and educating us about what you're doing and how we can be smarter about planning for our future. I think it was incredibly insightful, and I think people are getting a lot of value out of this.
Well, thanks for letting me share. I mean, I'm passionate about what I do. I think that what we do really, I guess kind of the last thing I'd say, and I'll just promise I'll shut up. It's just whatever we build in life, represents the economic measurement of our success. And it's only the economic measurement, but it does represent our time on this planet. And so when we think about, how are we going to, pass that on beyond ourselves, that's heavy. I mean, what's more important than planning to leave the people that you care about behind in the way that honors them and really sets them up to be the best versions of themselves. It goes far beyond the mechanics. There's much more that's important than taxes. There's a human element to this process that often gets overlooked when we focus on the mechanical, we focus on the tax. We don't really think about the human element of this. But it's critical. I mean, I don't know if you guys have kids or not, but a lot of the folks that will hear this ultimately will. One of these days, those kids are going to have to go on without us. And how are we going to set them up to really succeed and be the best versions of themselves, free from distractions, free from predators that could take advantage of them? Yeah, so that's really the most important thing of what I do. I think is trying to blend the technical, tax, mechanical, sterile, quantitative side of structuring with the human element of dealing with the totality of economic wealth that somebody's built in the hands of people who someday will receive it.
Very nicely said. Appreciate you sharing that.
Yeah. It's not for us. What are we going to leave behind? Who are we going to leave it to? What's our legacy is going to be? I think these are very important things to think about in these troubling but exciting times. I think we're going to end it there. Gentlemen, it was a pleasure sitting down and discussing all this with you for the last hour and a half, hour and 45 minutes. We'll see you guys next week on Last Trade.